What is going on, traders? In this video, I will be talking about how to pass PropFirm challenges, how to get an extension at least, and not waste your money on failing challenges. I've noticed a lot of people in the community are actually failing their challenges. And even though they have an edge and they might have a strategy or a model, they still seem to fail those challenges. And I will go over some of the common hurdles and some of the fixes that you can actually implement to avoid losing your account and having to buy another challenge account. So actually get right into it. So first of all, it's really important that you actually have an edge, right? So you need to go into the game knowing that you have an edge, and you need to know that you've established it. You need to trust your strategy. You need to trust your model and basically have an edge, because if you don't have a proper edge, an edge that you can actually prove with data, then you are basically just gambling. And trust me, you will be gambling against your own favor. You will be gambling and the odds will be for the PropFirm challenge. So if you do not have an edge, don't even get started with a PropFirm challenge, because it's just going to cost you money. And once you get that funded account, you will just lose it anyway. So there is no real point in going in for a PropFirm challenge if you do not have a proper backtested strategy yet. If you're looking to build a good strategy and a model, I do have a little course where I go over all the steps you need to take to establish your edge. It will cover all the concepts that I use. It will cover all the market visions that I have, and also just all the steps needed to become a consistent and profitable trader. If you're interested in something like that, you can find more information in the description and also in the Discord server, which is completely free, by the way. So once you've established your edge, you have a model and a strategy, and you also have a really strong base already. Now, the next thing you need to do is when you backtest your strategy and you notice that you have, like, let's say a 60% win rate and a 1 to 2 R ratio of reward, which means that you will win 60% of your trades. And when you win 2 R, and when you lose, you lose minus 1 R, which could be 1% or whatever risk you are using. But you need to know that during live trading, when you're emotional, it's very common, especially for beginners, that you will be making mistakes. So you need to calculate in that human error that you are going to be. And how you can easily do that is to just lower your risk. If you are making more errors, and you need to know this, you need to journal all of your trades. So if you know that you make errors, then you need to have low risk to begin with. Aim is always going to be to preserve capital, because as you know, you are allowed to go into quite a bit of drawdown with most PropFirm challenges. For example, with MFF, I believe you have a 12% drawdown. You're allowed to go 12% in the negative before you actually lose your account. So it's going to be really important that you just try to avoid going in a negative, because as long as you're in the positive, you will always be able to get that retake or sometimes even an extension. But more on that in a couple of slides further. So now it's going to come to actually building the strategy that you're going to use to actually tackle your PropFirm challenges. The first thing you need to be doing is actually building a cushion. So you know you basically start off with 0%. Your account is blank. The first thing you're going to be wanting to aim for is to actually gain 2%. 2% can in some cases be achieved in one trade. Sometimes it's going to take 2 trades. It doesn't matter. You're going to have to go and try to reach that 2%. It could be that you go with drawdown. It doesn't matter, because if you risk 0.5% on your account the whole time, you can actually lose 25 trades in a row. And if you lose 25 trades in a row and you don't gain a single win, then there's something fundamentally wrong with your strategy. So you'll need to assess that. You'll need to take a step back. But it's basically going to be impossible to lose your account if you are risking 0.5%. And the goal is going to be to actually reach that 2% cushion. And once you actually have that 2% cushion, you're going to start to scale up. So the things you're going to do is you're going to start risking a little more, because if you're going to continue with 0.5%, it's going to be really difficult to actually achieve that 10% goal, at least for some people. For professional traders who have been in the game for quite a while, it might not seem that difficult, but usually for beginner traders, they really do struggle with reaching that profit target, whether it's going to be 8% or 10%. It's going to be a lot. I mean, I'm not going to lie, achieving that, especially when you're starting out as a trader, is going to be really difficult. So you're going to have to increase that risk just a little bit. So I would recommend to actually start risking 1%. So as soon as you have that 2% cushion, you can actually start risking 1%. And if you lose that 2%, so let's say you lose 2 trades in a row and you're back at 0, you're basically going to start over again, right? You're going to start risking 0.5% once again. And then you're basically going to repeat that, build up that cushion of 2%, and then you're going to start risking 1% again. You're going to do that the whole time. And a lot of people might actually be saying like, hey man, this way I'm not going to make my challenge. But remember that the goal is not to per se make the challenge instantly. The goal is going to be able to be eligible for a free retake. or for you to be eligible to actually get an extension on your account. As long as you're not having to pay for new challenges, you're basically doing a good job. So this is going to be real important risk management. And honestly, if you have an edge, a proper edge, you should not be, if you build up to that 2%, it's really rare if you have a proper edge that you will actually be losing those 2 trades. Of course, that's depending on your win rate and whatnot. But usually with the ICT strategies, the win rates are anywhere between 40% and 60%. So it's going to be really rare that you continuously lose that cushion over and over again. So just try to build up that cushion, scale up, and then move from there. And I would not recommend ever risking more than 1%. Now, there's a different story. When you are in drawdown, and you actually have quite a couple of days left, let's say you have 20 days left and you're in a little bit of drawdown, there's no point in starting to increase your risk, because you will only draw yourself in a deeper pit, because every loss you make will be even stronger on you emotionally, and you will just get in a spiral, right? It will spiral out of control. So if you're in drawdown, I recommend to actually use low risk. If it seems like you are emotional because of it, then start risking 0.25% if you have to. Those losses, they are not going to matter that much. But I would say try to risk 0.5%, and when you're risking 0.5%, you can easily build back up to break even. And as long as you stay around break even and a bit above that, you can always get those free retakes, which is going to be the goal again. And let's say you actually reach the final week. There are a couple of things that can be happening, right? So basically in the final week, what could be the case is that you are in profit, but you didn't reach your target. What you have to do is to become a little bit more aggressive. So at this point, you could start thinking about risking 2%, 3% if you have to, or 1.5%, let's say. And only do that with the cushion you have, right? So let's say you are up 5% and you want to reach that 8% target. It's not going to be too bad to actually risk 2% on a trade and take a 1-to-1 there, and then get that 2%, take another one. So you're just going to be a little bit more aggressive. You're not going to let trades run that much farther. You're just going to try and take what the market gives you to actually achieve that target. This is not going to be following your strategy to the T, but more focus on, okay, I'm following my strategy. I'm using my edge to actually get to that funded state as soon as possible to pass my challenge. Then, of course, let's say you are in drawdown. You're in 5% drawdown. So if you lose 7% more, or in some cases 5% more, depending on the prop firm, of course, what do you have to do? Well, basically, it all comes down to you having to gamble. What you need to do is to actually get out of that drawdown as soon as possible. You're going to do this by risking a lot. So you're basically going to be gambling to get into profit. You're going to try risking 1 to 2% and take a bunch of trades. However you want to do this, it's going to be gambling anyway. Use wide stops or whatever. And also a way that I've seen some of my students that are actually funded right now, if I notice that they are in drawdown, a bunch of them actually use hedging, right? So what is hedging? Hedging is basically 1 or 2 things. Either you are going to take positions that counter each other, or you're going to hedge yourself out of the loss. So what that means is you start with risking 0.1%, so 0.1%, you're going to risk that. And let's say you're going to take a long. As soon as price moves lower, what you're going to do is take another long. And if it moves even lower, you're going to take another long, right? And that you basically do that with some kind of grid system. And we know that you've probably seen these EAs, these hedging EAs, you will see that they do make money over the long run. But then at one point, they basically lose the whole account because of a bunch of drawdown. That bunch of drawdown is usually days or weeks where price is really going one way and you're completely against the trend. But if you're in drawdown, this is a possible solution for you. And this is just an example. You can get really creative here. You're gambling anyway, right? You're not really following a proper strategy. You're just trying to get out of that drawdown. And I would say if you make back that drawdown and you only have a couple of days left, I would say leave it for what it is. Just take the bit of profit and take that free retake instead of actually aiming to complete that challenge. Just take a few days off and then start with a fresh challenge. Assess the challenge that you did and just go take that free retake. It's as simple as that. And now, what do you do when you fail a challenge? Failing a challenge happens, right? If you do the 30 days and you're in a bit of drawdown and you basically fail the challenge, no problem. Simply go assess the problem and fix it. Now, there's another story when you actually fail the challenge by blowing your complete account. That's not something that you want to see. At that point, you need to know that you are not doing something. You're doing something completely wrong. You're not sticking to risk management. Something is really off. So you really need to assess the problem and try to fix it. Assessing the problem is basically done by journaling all your trades and your emotions. In the course, there is a whole chapter covering that. If that's something you're interested in, check out the description. But basically, you just need to journal, assess the problem, try to fix it, try to find patterns. When you spiral into an emotional hurdle, where does it go wrong? Just basically try to assess what is actually going wrong and fix it. Now, when you're thinking about actually taking a new challenge, you need to basically think about, is it going to be in my interest to actually take a challenge now? What went wrong in the previous one, and is it fixed already? If it's not fixed, then I would say try to complete a few demo challenges first. Now, you do need to know that failing a challenge is not impossible, right? And it's not something that is too bad. I mean, the goals that these prop firms set, they are pretty difficult to achieve, especially if you're in your beginning years as a trader. You're going to run into hurdles, you're going to make mistakes. The spreads are going to take you out. There's going to be some funky business happening. So do not feel ashamed or bad that you fail a challenge. It's quite okay to actually take a new one. And if you are taking a new challenge, try to only put in the money that you can actually lose, right? So a really interesting way of actually building up funded capital is by, let's say, for example, you start off with a 10K account with the lowest one possible, and you basically build your way up to a 100K account. So you're going to use the profits from the low challenges to basically buy the next challenge and scale your way up. That's a really interesting approach. All right, so that was basically it on how you can actually easily pass prop firm challenges. If you use the steps that I described in this video, you should really be able to pass a prop firm challenge. It doesn't have to be on the first try, but at least in a retake. Just really try to manage your account and try to aim for those retakes or extensions. Don't really aim for that profit target. It will come on its own pace. You will get there, but really try to preserve your accounts. Try to preserve your challenges so you don't have to buy a new one every single time. All right, guys, thank you so much for watching, and I wish you a lot of luck with your challenges. If you have any questions to me, feel free to ask them in the Discord. It's completely free to join, and I will see you guys. Thank you so much for watching.